Well, the world is getting better, or most of it at least. Purchasing managers' indices from China show the economy stalling or worse, but in Europe and the US, they generally beat expectations. Of particular note were the good readings from some of the troubled peripheral countries, with Spain, for example, hitting the magic 50 level for the first time in 2 years. Germany was slightly disappointing, but the UK and US were solidly in expansive territory. The good economic news brought risk-taking sentiment back into the markets. The European and US stock markets were higher, as were most Asian markets this morning. Commodity prices also gained, particularly the base metals that would be in demand in case of a recovery in manufacturing, followed by those precious metals with industrial uses, palladium and platinum. It's notable that the markets can respond like this even while China lags behind. It gives me hope of a more broad-based recovery. The gains in commodity prices help the commodity currencies, with the New Zealand dollar and Australian dollar being the best performing major currencies of those that we track. The increased risk appetite also lessened the need for safe havens, and the Swiss franc and the yen lagged. EM emerging market currencies were mixed. This morning, the Reserve Bank of Australia held its interest rate steady at a record low 2.75%. Governor Stevens commented following the news that the Australian dollar, quote, remains at a high level, unquote. And he added, it is possible that the exchange rate will depreciate further over time, unquote. Probably the likelihood of further Aussie weakness is one reason they feel they don't have to cut rates further at this time. Although, in fact, the likelihood of further rate cuts is one reason why the Australian dollar is weak. Yes, this is circular reasoning. In any case, although commodity prices were up slightly overnight, the fact is that China is Australia's major market, and with the China PMI weak, I expect the Aussie dollar to remain weak for now too. The Aussie was one of the currencies that gained the most from the US quantitative easing. It's one of the currencies where the US dollar has the most room to recover. Aussie dollar can still fall further in my view. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.